Hello traders, and welcome to the second episode of Trading Tales. Today we are going to be looking at a very interesting pair, which is the pound dollar. This pair is trading at around 127 today, which is Tuesday, and therefore the following can be noted about the pound dollar before the inflation print. First, it has been on a very good rally against the US dollar and the Japanese yen. Therefore, there are some very key points that I have noted during my analysis of this pair. First, the pound has been the strongest currency of 2023. Last week, it got to around 128 against the US dollar. That's in the area of 2,000 pips from the swing lows. It's good to note that the rise is significant. It might only be 20 cents, but the more an instrument or currency has been trading in the forex markets, or in the market in general, the less volatile it tends to be. Therefore, making a 20-cent move can be read as quite significant. Next, according to Forex Factory, the Bank of England is expected to raise rates by around 25 basis points. This is on Thursday, and where we have a red envelope on the GBP. Fourth, Forex Factory also gives an inflation estimate of 8.4% for the UK. The Fed's interest rate debate has been dominating headlines in the recent past. The UK has more work to do compared to the US. This is just my reading. Now, higher UK inflation and a soaring GBP are probably what me and my lecturer wouldn't expect, but we live in stranger times. It can be noted that while rising inflation would normally mean a weaker currency, such as the GBP, accompanied by a high inflation rate in the UK, people nowadays expect higher interest rates from central banks once the inflation rate is high. These interest rates are really what cause major swings in the forex markets. Therefore, the red envelope this week on the GBP can also be expected to make a significant swing in the pound dollar pair. Next, on this dynamic, interest rates around and above 8% could result in higher GBP prices, perhaps beyond the 130 zone. So the 130 happens to be a level last seen around April to March to April of 2022, and therefore it will be interesting to watch the reaction of these markets once that price is attained. Remember, if my projection is that if these rates are announced to be around 8% or above, this pair could as well get to the 130 region last seen between March and April of 2022. Next, on the reverse side or the flip side, if the Bank of England goes ahead and raises rates by 25 basis points, I can expect the following from this market. 1. If the hike in the rates in the UK, followed by a Jerome Powell signal of maintaining a 5% ceiling in the US, we might see a reversal back to 120 region, which acts as the previous major support for this currency. So here's what I'll be waiting for, and here's what I'll be watching so that I can read into this market and make my move when my chance comes. 1. We have a red envelope news item. This is on Forex Factory, and this is on Wednesday at 9 a.m. This is East African time. This red envelope will give us the CPI year over year, and therefore it will be interesting to see how the market will react to this news. Second, on Wednesday we have another red envelope. This is on the USD at 5 p.m. East African time. This will be when Jerome Powell offers his testimonies. Next, on Thursday, we also have another red envelope. This is on the GBP at 2 p.m. East African time. This is when we'll get the official bank rate for the GBP or the Bank of England. On the same day, that is on Thursday, we also get to see the latest unemployment print on the same day at 3:30 p.m., followed by more Powell testimonies at 5 p.m. So be sure to watch the markets, read the news, and see how the markets react. This has been my analysis on the pound dollar. Remember to catch my analysis on gold in the previous video, which will be displayed at the end. Also, don't forget to join me for my live streams each Monday to Friday.